all, but it's very icy. All right. Anyway, we're in New York. Finally got up here. Apparently there was a storm of the century of the year. Sorry. And I was flying in exactly when it happened. All right. So that's why my flight got delayed on Tuesday. I didn't get up here until Thursday afternoon, and now it's Friday. All right. So interestingly enough, I did end up I made a Monday market breakdown for this week, but I never had a chance to push it out. So I want to actually I still want to push it out, but I want you guys to review what I thought was going to happen. So now you can kind of look back into the charts and see exactly where we're at. So in that Monday market breakdown, I mentioned that there potentially is a change in sentiment, and it's true, right? How we know that is we had interest rates hike, okay? That was 99% chance Fed fund rate is soaring, okay? 25 basis points. We're now at a 5% for, you know, holdings of these not the government, but holding of loans for the short-term interest rates, blah, blah, blah. If you understand the interest rates, I'll put a link down below, maybe give you guys a definition of it. But we're now at 1%, and many people were saying that, man, this short-term interest rate was already priced in months ago and all these things. That's not actually true, okay? A change in sentiment doesn't have to happen months ago to where people priced in the rate, and then now there has to be even more new data for us to break certain lows, all right? There's just, since the rate hike has happened back in 2016 till now, what you see is you saw a lot of geopolitical risk coming into the European Union, right? You saw Brexit happening, okay? Those things are serious, all right? And they definitely can have a lot of implications as to the valuation of the currency. But once people really start to look at the data coming in from the European Union, they'll start to see that the European Union, in terms of its growth rate and inflationary rate, is doing pretty well. They're really close to actually hitting targets. Okay, so all the jawboning that's been happening by Marine Le Pen, the future hopeful prime minister of France, okay, she's going for it. She probably won't win. She's actually losing in the elections. All the jawboning, all the geopolitical risk, and the European Union splitting apart, and everyone shorting that, conversing to the dollar, that's kind of going away. Okay, literally Draghi last Thursday, we saw him say what? He said there should be no more need to heighten rates. So again, folks, we're having a change in sentiment as to where people feel as if, yeah, the US dollar may be getting a lot more powerful, but no one was really expecting within the past month to 2 months for the European Union to start having so much strength, start hitting off on their inflationary targets, for all the geopolitical risks to simmer down a bit. So now people are starting to get a little less emotional and look more at the facts in terms of what's coming in terms of the reports, the economic reports. And we're seeing literally, we saw the euro come down as low as what, $1.03, and now we're sitting at $1.07. If you go back to the last time we were at $1.07, I think that was when we just came up into the high, and then Trump started talking about tax reform. I think I went over it into the charts with it. So again, guys, if you look at this thing on the monthly time frame, and this is what I'll be talking about next week, there's so much chance for upside potential for this European Union, all right, for this Euro U. So right now we're sitting at $1.07. We could absolutely, I'm not saying we're there yet, but we could absolutely come up into $1.10. We can start to come back into that initial range, okay? I'll show you in the charts next week, but what we're gonna talk about this week is the forecast, okay? So I did see that we could potentially push a lot higher from that original price point where we were at. I think we're in the low 04s, low 05s, and on that Euro. On the Aussie, I wanted to sell that Aussie off, but we had an immense up move on the Aussie, again, based off of the US fundamental data that came in. And even on the pound, I did say in the pound that we could come back up into the range because we really overextended the sell side momentum, okay? So go look at the analysis for yourself, go back, check the charts out. I'm fully transparent in that ideal, okay? Other than that, I got a lot of things coming out in terms of content for the next couple of weeks. I'm gonna be up here for potentially, I don't know how long, maybe 10 days, 2 weeks, I don't know. Could really just, you know, play it by ear. If some important things come on in in Atlanta, then I'll definitely head on back down. But until then, I'm gonna try to do as much as I can here, get as much content as I can here, network with as many people as I can here, and so we can expand this thing. All right. So other than that, guys, your profit is always my motive. If you ever need anything, you can contact us over at MotiveFX. I'll also put my email in the description below. Other than that, just get ready for a lot of content that's going to be coming out in the next couple of weeks. and enjoy the view, as I am. I'm up here like every day. Check it out. It's cool. Pull over into these charts. We got our 3 up: Euro, Aussie, GBP. Okay. If you guys look at my bottom row here, I do got the USD JPY, US CAD, and that gold. Okay. I'm looking for opportunity elsewhere. The markets are a little bit more, volatile to say the least. Okay. But if we pull back over into our 3 guys, there is some serious structure and there are some serious fundamentals coming out for this week. And I advise for you to trail lightly. Okay, this could be a week that you lose everything, and it is doubtful the week that you make your living, right? So it's more likely that you destroy and capitulate your account than you end up being able to go on vacation for the next 6 months, right? So I think it's best to be a little bit more risk adverse than anything else. All right, so if we pull over into our Euro U now. Earlier, I spoke about some of the fundamentals. If we pull over into the technicals, there's a lot I want to draw up here. Now, God, if I could tell you guys how many contrarians have come out into the woodworks in terms of saying the euro is going to scale to the upside. I mean, I saw one guy mentioning that the euro could go to $1.22. Okay, now I understand why he wants to push it to that level. He mentioned that he loves mean divergence, but man, this guy's talking about mean divergence on a weekly, monthly, yearly time frame, So I think the market's a little bit more driven by sentiment in that case, all right? So if we pull on over, let's start drawing up the first fibs here. I want to draw up the one that we've been using for quite a while from the high to the low, all right? And this was a fib that we used a while back in the beginning of the year. So I know you guys know what I like to do. I want to talk about week after week and talk about what happened, okay? So boom, guys, what do we have? Trump interest rates. Okay, you want to price all this stuff in. You have a little bit of disparity with the Trump trade and that reflation trade. Okay, you have a lot of individuals that are a little bit skeptical as to Trump being able to get done what he wants to get done. Okay, and you saw that come out in the market. So you see a push to the upside. Now, this wick showed me a lot of liquidity availability to the buy side. All right, so I wanted to buy up the market because of this enormous extension to the upside. This wasn't a lot of people would say this wick was, they're selling the market off. For me, in terms of somebody that is a liquidity seeker, a price discoverer, all right, I definitely saw the market could push, and then eventually that's what we saw. So once we came up into this high here, the true test as to really see if this market's weakness was to come in, the USD weakness was to come in, was a break of this level there, and that's something that we look to see. So this was around the time that Trump was still talking about what, guys? He was focused on the Muslim ban. He was focused on the Trans-Pacific Partnership. Okay, he's focused on being a dick to the Prime Minister of Canada, right? So what happened? You see some more weakness to the upside, and then we start to level off up here at this high because a couple of things started to happen. You have one of the prime ministers of France doing a little bit better than expected in the election. You heard Trump starting to talk about tax reform. Okay, so we're having some economics come in on the U.S. front, and we're having some political unrest coming in on the European front. Okay, outside of that, the likelihood for a rate hike in March started to increase. Okay, so you see one more push to the upside. Okay, you saw some a little bit of a seek for some sell side liquidity, and then immediately this was the last push. So we mentioned in the breakdowns last month, I think this was around February. Oh, this is end of January, that we would see this market come up into the '08 level. You can go back and check yourself. Go back to the breakdown and look for it yourself. And then we immediately saw a rollover. So we drew up our fibs, okay? And once we drew up our fibs, then we kind of saw some areas that we would want to potentially take price down into, all right? And so we immediately got there. The week that Trump started talking about tax reform, he used one word, and I think it was phenomenal, and the whole world turned its head to really start wanting to be a part of that campaign, okay? So as of right now, what do we have? We see that the market pushed to the sell side, came all the way down into 0516. So right, and right now we're feeling that void. Okay, when I see wicks, I see availability. I see availability for price action, availability for liquidity. All right, especially since you guys got to think this is a weekly, but there are intraday and there are daily candles going on there, and there is a hunt for liquidity happening on those levels. All right, and that's what I was seeing. All right, so we came down and we floated around here in these levels. And what you'll see is, boom, we immediately kind of came down. We floated right there at the 05, 59s. And then right around this time, I think we're about to shoot over a week. And we really spiked. We spiked to a high. And this move right here, most of this move happened on Thursday or Friday of last week. Now, what happened was, you saw that the German bund, okay, the German bund, the 10-year bund, all right, that is that's how they track. That's the treasury basically for Germany. But again, Germany is the strongest economy in the European Union, so you see a lot of debt going into the German economy, and you see a lot of bonds coming out and loans coming out from the German economy. Okay, so when we saw that the German bond was up, when we saw that Draghi mentioned how he wanted to raise rates potentially. Okay, nothing as of yet mentioned that he should stay steady, should stay flat at the negative 40 basis points that he's at until the end of the year. But again, he had an inkling that there was going to be no more of a need to increase QE. All right, quantitative easing. All right, so what did you see, guys? You saw a lot of strength come into this Euro USD. So if I pull over, here's that Thursday and here's Friday. All right, so since then we've been sitting up here at this high. Now, the reason why that's important is because you guys got to think there has been barely any kind of pricing in of a rate hike for the European Union, right? Everyone's kind of worried about the European Union collapsing, but at the moment there is an inkling that the European Union could potentially heighten rates based off of some strengthening happening in the economy. It's been record. You can see the data that the European economy is growing faster than the USA economy. Okay, so there is a fear here. All right, there is a serious fear here of this market, of those individuals that want to sell this Euro USD off. There's a fear that this European economy is going to be picking up a little bit quicker than expected, and you guys got to understand. Just like how Trump has been screaming about, political unrest and how the nation, sucks and all these things, the same people that are running for these political offices in the European Union, they're doing the same thing. Okay, they're just talking up a lot of shit. All right, and again, what does that do? That gets a lot of market movement happening. Okay, is the European Union going to completely collapse? Earlier this year, I was caught up in the hype, okay? But the good thing is I made money when it was happening, right? I was wanting to sell that euro off, and that's what was going on until I started to see how Trump had really no business doing what he was doing and being the fucking president. So we saw a lot of push out of that 03 level, okay? But as of right now, people are kind of really, the market's getting used to this whole this jawboning effect that's happening with the politicians. They'll say one thing and they'll say another thing to shake the market around, and then now at this point the market's like, yo man, whatever, bro, it's just taking the hits. Okay, so at this moment, guys, if we're trying to price in these fundamentals, again, we mentioned this is that U.S. weakness, this is that U.S. strength with some of the political unrest coming in. Look, if that political unrest, remember what this move was. If that political unrest is starting to get, if people are holding less value based off of the jawboning happening, guys, you're going to see a retracement of this move here. And we've already seen the move come back up into the 61.8% retracement. Okay, so if people are looking more at data and less at politicians and just noise, then you might start seeing individuals wanting to buy this euro up. Okay, so remember, folks, sentiment can change. And, yes, the rate hike is coming, but you would have thought that by now, okay, you would have seen, you would have thought you would have seen some kind of sell-off occur, okay? Now, I'm not saying that, once the rate hike hits, we're not going to see a huge sell-off in the marketplace, for maybe 80, 100 pips and shit like that. Okay, yeah, that might happen. You might have some people throwing their money around. But all I'm saying is, from the long term, potentially for the next couple of weeks, and definitely for the next couple of days. When that rate hike hits, guys, you guys understand it. It's going to be another 3 months until another hike. Okay, we really might see this Euro USD push back to the upside. All right, so this is what I want to draw up for you guys. We had this market come down into the 61.8. All right, and if you guys notice here, let me take off some of these other drawings. Market came up into the 61.8 and kind of flew over a little bit. Now, yes, this was a pretty quick move, and I do like to buy. I would love to buy this market down here in the high 05s. Okay, so that is an area of buying that I will want to see. Go back and watch the Monday market breakdown, and I mentioned that I wanted to buy the market a little bit lower down here at this price point in the low 05s, okay? And we kind of broke it a little bit lower than I expected, but we were pretty much there, okay? So if this market can just retrace down to the low 05s from the 61.8, push down into the 38.2, they will have a pretty good chance to get in on this buy, okay? Now, I want to show you guys the other move that happened the other day. Okay, now here's the quick momentous move on a very weak leg. All right, so this is what I like to see. We see a break of the 23.6. Mentioned that earlier today inside of our community. And as of right now, we flew down and now we're sitting around at this 38.2. Now, can this market hold the 38.2 and race away? Yeah, I mean, of course. All right, you guys know what I'm going to say. That's the fucking business. But at the moment, it would be nice for this thing to push down into this 50% level, and then that would give us some really, really awesome buying opportunities, right? So buying up here at this 38.2 on a weak leg, guys, look, this isn't scalable, right? This isn't something you do, this isn't a trade that you take, 100 times, all right? You just wouldn't want to do that. You'd really start to see that the market would traces on these weak legs down to the 50-61. All right, so that's something I'll be looking for. Okay, so again, that gives me a little bit more, a little bit stronger of an opinion to want to sell this thing off. All right, so again, this is that 61.8, came up into the 61.8. Right now, we're sitting here at the 50. Again, coming down to that 38.2 is still coming down to that around the same zone of the 50 and the 61.8. We already broke the 50, so it would be nice to see that thing sell off a bit, okay? And again, if you go back to that last breakdown, you'll see I mentioned that a sell up here from this high would be very nice, and that's exactly what we're in right now, okay? So, yeah, let's just move on. But again, guys, it's a very interesting trade. All right, so for the long term, though, okay, I know we crank these things out weekly, so I don't have to give you guys a month analysis for a month out. Again, there should be no reason why we can't come up. All right, we already came up into this high here, come down into this zone, okay, and then crank out. Honestly, and then crank out back up into the mid 07s, potentially the low 08s, mid 07s, low 08s. So 0750 to 08, that could definitely be our next target. If this buy comes in. Now, if this sell-off happens and this U.S. strength just honestly really rips this market to shreds, then, okay, yeah, we may see ourselves come back down all the way into these low 05s. But this is what I want to show you guys. We have an interest rate move here from 0668 down to 004, so around a 200 pip move. All right, that was our last hike. Okay, a hike that was fairly unexpected. Okay, as of right now, folks, we've had about, I think, around 10 days of around an 85% chance that we're going to hike on March 15th, and we're still sitting around at these highs. So again, folks, this is another situation where I want to mention that it's just we might already be priced in. We might have over-exaggerated a lot of this right here. Again, this is Trump. This is the hike. Okay, we might have already over-exaggerated those price moves. And so if we have, then we already have our U.S. dollar really where it needs to be. So that doesn't mean we won't have some market sell off once that hike hits. But for it to just continue down to parity and here's the hike and here it comes, guys, not yet. It's all about timing for this thing, and I don't see that happening yet. So again, if the analysis right now is a little bit confusing, remember we have a lot of things that we need to price in, and again, if it is confusing, that's good. I like to see that because I know people aren't doing the due diligence they need to actually be able to make money. So that's going to give me an edge. That's the way I look at it. All right. So again, folks, when we're coming in from this low to this high, we already popped down to the 61.8. When we're coming in from this high to this low, we already came up into the 61.8. So those are two things there. 61.8 from this high, and a very quick move from this low to this high. That immediately could tell me that we should see this thing sell off back down into this zone. So that's something I'm looking for. So either I'm looking to catch a sell back down in, or I'm looking to buy the market down here at this high. Now, that's my sell basically. So my sell is really sitting around these areas here, where I'm at the moment. Okay, so let's just see what we get on this euro dollar. Again, I'm probably going to return back to this thing later this week. Okay, so for this Aussie USD, now look at that. Go ahead, Aussie. I love to see that. Okay, so at the moment I am in a Aussie short. So let's see. I mentioned right here, guys, if it can hold. Where am I at? Aussie should break this low at 75.67. I'll be looking out for that. So I did probably just get triggered in that move. So that's exciting. But looking at this Aussie, guys, I definitely see this thing could potentially start rolling over. So if I draw up the daily, I love being triggered in trades as we're in the breakdown. That's awesome. So here's the situation for the Aussie, right? So we had our push up. All right, gold strength, enormous. All right, but I just checked out gold, folks, and I still see some weakness coming. So that's a great sign. Outside of that, you have wheat, you have wheat, you have crude oil, you have cotton. Okay, you guys gotta understand, Aussie is like over a third of the economy. I think over half the GDP alone comes from commodities. Okay, so you have to understand that if you're not tracking that stuff, you're really missing out. So let's see what happened with this Aussie. Okay, I am in this Aussie. All right, I really do see, if you just look at the wave structure here, that we can continue this sell-off to the downside. Now, if we draw up this low to this high, you guys know we've been waiting for this Aussie sell since we've been up into this zone for quite a long time. For over a month, we waited for this Aussie sell because we were talking about it back in January. So we're finally here. All right, the market is making lower highs. Okay, I love this wave structure going on. So we have a lower high. Okay, we have a lower high. We have a lower high there. Okay, lower lows coming in. All right, so if we continue, all right, there's no reason why this thing shouldn't pop down back down to the 74s, low 75 flats. Okay, so that is something I am looking out for. Now, definitely for the swing, it will be great to see this thing come down into the 50. If I draw it up on the weekly, you guys will see how substantial that level really is, and it is more of a zone. So if I pull it over here, now this 50% level here, so we have some very recent structure there down in November, so that's right around our rate hike. Okay, and if we pull over again, we just have a lot of consolidation. You have some retail numbers coming out way back over here in the Australian times. Okay, so here's a nice little zone that I would love to see this Australian dollar come down into. Okay, so now the good thing is we do have the hike on our side. We do have the commodities on our side. We should see this play out. Not only that, that was a pretty quick move up for a 4 hour. You know, I mean, if you just look at the volatility on this move and look at the volatility on this move, we got there sooner, which means we should see some profit taking happening. Okay, so that's a pretty simple trade for me on the Aussie. When do I want to buy the Aussie? I really don't. So if a buy happens, then I'm going to lose money, right? So other than that, I want to sell the Aussie off. Now, so for this GBP USD, now this is a very interesting scenario. Everyone's been waiting on this referendum, right? Now, tell me why Scotland has decided to have a referendum for the UK. Isn't that interesting? You guys, go look at a map. Scotland is inside inside the UK, United Kingdom. Okay, and now they want a referendum. They want to be their own independent economy. So what was that? That means Scotland's going to be a country? If so, that's interesting. That's very interesting. But guys, that's not good looks for the pound, right? So I'm sure that has a lot of implications in terms of trade and cash flows, and that adversity, that risk adversity that may come in from that ideal could cause this thing to sell off a bit. Okay, so we did see a push outside of this channel here. Jesus took that push out, 23.6 break, really nice move. Came up into the 38.2 of the overall move. All right, let me draw it up instead of just eyeballing it for you guys. Sorry about that. So there's a 23.6 on that move, and then when you come here, here's a 23.6 break from the lower move. Looks a little bit ugly, but look at that confluence right there, that 23 and that 61.8. Very nice, right? So anyway, now this is an interesting scenario. We've seen, the only thing I don't like about this pound is we've seen such an enormous amount of liquidation coming in since we've exited out at the 23 mids. Okay, so we've came all the way down to the 21 mids, and now we're sitting right now in the mid 22s. Well, we're at 22 flat, so 22.06. All right, so that's very interesting. Now, again, this news that comes out about Scotland, the referendum comes out a little bit later this week. Again, this pair as well is packed with a lot of just junk. All right, so again, if you don't want to really figure all that stuff out, I suggest you just kind of stay away from it. But other than that, I do not like the fact that we've already seen such an immense amount of liquidation coming in from the break of the zone that we mentioned in the last breakdown. Okay, so if I pull over into the daily, this is a very beautiful structural zone that was being held here at this 38.2, and that is the same zone that we wanted to have broken, I think, last week. All right, so 2 weeks ago. 2 weeks ago. Time flies. All right, so we're now here. Okay, boom, sell, 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 sell. Literally, for the past 12 days, we've had maybe 2 green candles. Guys, that is scary for somebody that wants to continue selling this market off. All right, especially being down here at these around these 21s, mid 21s, low 22s, because this has just been a very heavy area of consolidation and price rejection, and we've already seen that happen today. All right, so is this just one retracement for the market to roll over? You know, I don't really see that being the case. I would rather just kind of wait around and see how the market tests this level here during this overnight section, and if we can hold this level, then we'll absolutely, this will be a lower high, and we should see this level broken. So it's just that simple. That's what I'm looking for. Okay. Now, if other than that, that's really just it. The sell was probably up here at this high. That was a very nice sell. I was mentioning earlier last week, I think on the weekend, that I would love to sell the market off right here at this high. And now that's already happened, and now we've came down into this low. So I would like to honestly see, I would want to see the overnight session. I wish I could stay up for it. I would like to see some closes around here, structure, and then potentially we could see the market break and rip out. Okay. And our next target would be, really another fib. So we could potentially come back up here into this 50% retracement level. And if I draw from this high to this low, then our next target would be the 23 flats. Okay, 23 flats. So guys, this is a very interesting week. Very interesting week. All right. Again, I want to buy this pound only based off of the sizable retracement. Now, again, remember, we do have the rate hike coming in, in the next 48 hours. So, you know what that means, folks. May not even have a position on this thing, just based off of, again, the price action contradiction between the price action and fundamentals. I do not like that. All right. So now for this Aussie, I love the fact that the price structure aligns with fundamentals. That's good to go. And then for this Euro USD, technically my price action does align with my fundamentals, but I just need this Euro USD to rip to the sell side. I don't need it to hold these highs up here. Okay, so if we can just break this 38.2, then that would be grand. All right, we haven't even touched it yet, so we should see some price action come down into these levels. We'll see. But other than that, folks, your profit's always my motive. It's it's going to be a fun week. I suggest you just sit back and watch and give yourself a chance to, observe some pretty intense price action. But, again, if you're going to play, then hey, look, I didn't tell you to get in any positions. This is just what I'm doing. Just play it safe. All right, manage your risk. Remember, I just mentioned in the chat room, when the volatility picks up, guess what? Those stops have to widen. When stops have to widen, guess what, folks? Trade size have to get smaller. Okay, so that's how I'm going to be trading this week. Okay, so wider stops, smaller positions. That's going to keep me safe. Okay, and that's if I execute on anything, and I am in that Aussie at the moment. All right, so I'm going to give you guys an update on how that runs. It looks like it's running pretty well. We're seemingly breaking low. Oh, well, look at that. All right, that's not bad. All right, guys, your profit, my motive. I'll talk to you guys very soon.